Michael Darda, do you have to reassess global GDP dynamics because of a true pandemic crisis in the United Kingdom?
I don't think so, Tom. I think what's happened here is that, as Lisa mentioned, you had markets that have already priced in the stimulus bill that seems to be on the docket now. We had markets trading at pretty lofty valuations, a lot of good news priced in, very high retail investor sentiment, which is typically a red flag, at least in the near term for risk markets. And we've been getting bad news on the pandemic for some time, recently punctuated by what's going on in the UK with this new strain of the virus and aggressive lockdown. So I think that explains what's happening today. I don't think that necessarily explains where we're going to be in 6 or 9 or 12 months.
What part of the market can you be opportunistic in when you have the courage to get out a buy ticket, Michael? What part of the market is most advantageous now?
Well, Tom, I think the reopening trades and cyclical value, that's really where the upside is. In a risk-off environment, we probably will see the so-called stay-at-home stocks outperform again. But investors should be very careful because the valuations there have exploded to the upside. If we look at tech and comm services and consumer discretionary, all trading above fair value based on the modeling that we do, and that includes these extremely low discount rates. So in an environment next year, even if it takes a bit longer, even if we stumble a bit with the vaccine rollout, but eventually, as the pandemic is brought under control, you get full recovery, probably some upward pressure on discount rates on the 10-year yield. That could be a real problem for super highly valued sectors that dominate the S&P 500 market cap. So I would be looking at reopening trades in cyclical value, those lower valuation stocks and sectors that are still cyclical. If they sell off, and they probably will, in a risk-off pullback, that's where I would be adding to the portfolio.
Okay, Michael, would you be adding on a day like today? Is this a buyable dip?
I think so. I think, the way investors should treat these pullbacks is, not to go crazy with any, one-day movement, but to gradually be leaning in if you do have some cash in the portfolio, but not across the board, not in tech, comm services, consumer discretionary, but in those value-based sectors and in reopening trades. So I would do it gradually. I would do it on a day like today for sure.